recording today's session, so I'll do a quick countdown to get us going. And before that, a couple housekeeping issues. Everyone in the audience is, of course, on mute, but when we get to the Q&A, you can type your questions in the chat box on your panel, and we'll make every effort to answer as many questions as we can, and any questions we don't get to, we'll be happy to respond to you directly at some point after the webinar. So let's get going. To start the recording, let me count it down. 3, 2, 1. And welcome. We've got a very exciting broadcast today in this webinar with a special partner at Chestnut Advisory Group, Amanda Tepper, on the topic of investor relations. And we're going to cover this from a couple of different angles, but what I can guarantee you is everything you think you know about this important function maybe turned slightly on its ear. The data that is coming out as this investor relations profession grows up is quite striking, and you're going to get a lot of very practical advice that's going to, I think, be very useful in growing your assets. So we have two primary speakers today. Amanda Tepper is the founder and CEO of Chestnut Advisory Group, a consulting firm that works exclusively with asset managers. And they really focus on maximizing client returns on sales and marketing efforts. And they've also found and partner a very interesting, unique strategic support platform called Investor's Edge. And Amanda's going to tell you more about that. Couldn't be a more qualified person to be speaking today. Amanda was global director and a senior portfolio management team at AllianceBernstein, and she's held a variety of roles at places like Bank of America, and it was even an institutional investor, all-American team ranked analyst at JP Morgan. And also speaking today is Ketan Kandekar, who's co-founder and principal here at Navitar and really one of the world's top experts in commercial cloud products. He heads all of the firm's financial services product strategy as well as operations teams both in the US and India. And under his leadership, our product portfolio has grown significantly, now supporting customers in 30 countries. And so you're going to hear a lot about how Navitar can accelerate a lot of the stuff that Amanda's going to be talking about. And then at the end, our VP of Sales, Alan Siegert, is going to take questions and help guide all the conversation that we hope will take place in about 40 minutes. So with that, let me turn it over to Amanda.
Thank you, Jarvis, and thanks everybody for dialing in today. This is really terrific that there's so much interest in this topic. We think it's pretty important because that's what we do every day. And our research shows that what you all do every day is really important too. So we founded Chestnut on the back of a white paper, and while it might sound a little controversial, as Jarvis said, please stand with us because the data is really strong and the results are bearing this out. The title of the paper is Your Performance Doesn't Really Matter. And I'm pausing for effect because I'll say it again. Your performance doesn't really matter. Your portfolio managers may not agree with you, but as you see the data I'm going to share with you, you'll see that it's true. So our research showed that trusted asset managers raised more than 4 times more capital than the top investment performers they were competing against. They're also hired much more quickly, they're retained longer, their clients are much more open to investing in new products and reinvesting in existing products. So we have a little bit of information on the next page about some of the asset managers who already know this and are benefiting from this. So you can see on slide 4 that the winners tend to be the largest asset managers, and this, we believe, is because they've invested the most in their investor relations efforts over the last decade, and not by a little, by a lot. And now, these are generally perceived as the most trusted by investors, and that's research we conducted. Over the last decade, they've gained unbelievable market share. If you just look at the top 10 global asset managers. They now have half of the market. This is a huge amount of consolidation, and I'm sure as all of you compete against them, you know they have not gained market share because of their investment performance. And the same is true on the hedge fund side. Last year, hedge funds received 65% of all net asset flows, the very largest hedge funds. So the best news about all of this is that building a really strong perception among investors is something that any asset manager can do. So if you want to play like a big boy, the number one thing you should be thinking about is how you can build a stronger perception about your firm among investors. If you look on the next page, here's peeling back the onion a little more detail on the research we conducted. So on the left, you see that lovely looking green tree. Those were the best capital raisers, and the tiny little bush were the best investment performers. So here's what we did. We took eVestment data on 4 different investment categories and looked at them over an 8-year period. And we broke them into quintiles. One was trailing 3-year investment performance. And we picked that because we think out of all the investment numbers, that's the one that institutional investors center on the most. And then we compared that to ranking them in quintiles by the next 12-month capital flow. And as you can see here, the top quintile capital raisers over that 8-year period raised $175 billion, where the best investment performers by quintile raised only $42 billion. And by the way, the performance differential between the two wasn't small. It was 86 basis points annualized. So the top capital raisers' performance was 86 basis points lower than the best investment performers. If you look on the right side of this page, the same holds true when you underperform. And this, again, is counterintuitive, but very persistent and strong data. So the green lines here for the 4 different categories we looked at, the green lines show the net asset flows of the bottom quintile of investment performers. And the brown lines, which as you see are much more negative and longer, are the net asset flows of the bottom quintile of net asset performers. So even though the performance of the net asset flowers was better, and again, here it was 81 basis points better annualized, they lost many more times assets. In fact, on average, it was about 7.5 times more assets lost. Our interpretation of this is it's hard to gain trust, as you all know, but when you lose it, investors will really punish you. So these green lines, these brown lines, are all the reaction of investors who had trusted and lost that trust, and good performance didn't make up for it. So now the question is, how do you become the big green tree on this page? So if you turn to the next page, we start to answer that question. This is a framework we use at Chestnut on building investor trust. We call it the golden circle of asset management investor education. And think of the 3 rings here on this bullseye as the outer ring would be the what, the middle ring would be the how, and the center ring would be the why. We think 95%-ish of all asset managers are stuck in that outer ring. They're at the what. The what meaning all of your messaging is about explaining what you do, who you are, how you get your performance, what your product is. It's all descriptive. And that doesn't really resonate with investors. There's a lot of noise there. To get to the middle ring of having some trust, which we think 4 or 5% of asset managers are there, that's built as a dialogue over time, and that's the how, so they at least are understanding how you deliver whatever it is, the service or the product or products that you deliver. And as we'll see a little later, understanding how you deliver your product is crucially important for building trust over time. But to really get to the center, you have to answer the why question. And the why actually doesn't have anything to do with you. It has to do with the investor. Why do they care about your product or your company? Why do they need to have your product in their portfolio? This is something that you build over time. This comes with a lot of education, and it also comes with a lot of focusing on which sectors of the market can you have a very strong answer to that why question. So I'll be back with a little more on this, but for now, I'd like to hand it over to Ketan.
Thank you, Amanda. Hi, everyone. Welcome to the webinar. This is Ketan Khandkar from Navitar Group. And I was actually very intrigued by the Chestnut research, and mainly because it was actually backing up some of the kind of data that we had, more anecdotal, based on our discussions with our customers. Right? So we are constantly in touch with our customers. We kind of get feedback from them, and obviously most of them are involved in investor relations processes. And in talking to them, there were kind of certain themes that were coming out for us. One was kind of a lot of them were telling us that fundraising nowadays, it's almost like a 24/7. I mean, not day and night, but essentially it's a continuous process. So you should not be fundraising only when you're launching a new fund or only when kind of there's a new product in the market. The success of the fundraising is dependent on actually what you're doing when you're not fundraising. So that was a message that we kept on getting from our customers. Another theme that kind of came out was that the investors are getting more savvy. Right? They have a lot more demands now, and they need more information. And again, part of it is a reflection of today's environment. It's easy to get more data today versus, let's say, even a decade ago. And that's forcing some changes to the way the investors are deciding where to invest and who to invest in. And they want to get to know you much better, and they want to get to know your internal processes much better. And it's part of their own risk assessment that they're doing. And the third theme that we kept on hearing from our customers was, yes, when they're in fundraising mode, re-ups, right? So getting your existing investors to invest into new products that you're launching, new funds that you're launching, is important. It was slightly surprising though, because kind of while we were getting the feedback that it was important, no one was actively kind of doing anything about it to let's say increase the re-up percentage, for example. So these kind of themes resonated very well with the Chestnut study that Amanda just walked you through. And what we thought we'll do in the next few minutes is take this concept that has been laid out here and talk about how the Navatar technology can help you accelerate and address some of these things. So we'll start first with kind of the outer layer, understanding the investor. Right? And again, most of you do this today. However, it's a process where a lot of times there's no institutional memory as such. It may be kind of you as an individual, you know the investor, you have information about the investor, but maybe as a firm, your firm does not. And so if you leave the company, then kind of all that information goes away. And in understanding the customer, it's obviously important to kind of do the right research, use data sources, build an intelligent profile about these investors, and it's based on what you have read about them, what you have kind of found out from data sources, but also most importantly, what you're discovering based on the interactions that you're having with them. So listening to your customers and kind of incorporating that. Developing tear sheets, kind of when meeting with them, organizing yourself so that kind of the meeting is productive. Tracking all the influencers that may be involved, right? So consultants, advisors, these are all people that you need to be in touch with. So I'll switch screens now and we'll kind of go deeper into some of these aspects. And we'll kind of use an example of an investor, right? And talk a little bit about how you can manage the first circle, which is understanding the information about these investors. So again, using a large, pretty well-known investor, Calstus. The key thing here is kind of building an intelligent profile, uh, and 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 doing that kind of from an institutional memory perspective, right? So for any investor, try to kind of get as much information as possible. So you'll see kind of you can track what kinds of investments they like to make, what are the types of funds they like to invest, what is their overall process, right? So do they invest in alternatives? How much do they invest? And depending on your focus areas, right? If you're a private equity fund, how much do they invest in private equity? If you're a hedge fund, kind of how much do they invest in hedge funds? So you can slice and dice this data, but the key aspect here is to be able to create a structure that you can then go and update. So if I have a conversation and they say that, hey, they're no longer doing co-investment, you should be able to go and indicate and remove that from the investor profile. Right? So there's the concept of building intelligence about your investor. Now you can augment this by using data sources. And there are several data sources that I'm sure many of you are using. We hear quite often that, for example, Preqin is something that's used quite often. And you can use these data sources, and what they allow you to do is look at kind of the latest information that they have about the investor. And hopefully kind of it matches your understanding, but kind of you may find new things in here, and you can use this research to then enhance the profile about this investor. So creating a profile, keeping it updated, using data sources, this allows you to gather intelligence about this investor. Now, it's not just kind of getting this intelligence, it's also about using this intelligence, and we'll talk about that in kind of the next aspect, which is building the trust with this investor. But I'm sure all of you have periodic meetings that you're doing with these investors. It's important to be able to kind of plan for these meetings. It's important to know who you're talking to, and a lot of times kind of it's useful to have a summary of what everything you know about the investor. So something that we highly recommend, kind of a lot of our customers are creating their own tear sheets, and I'll show you an example. So you can kind of, with a click of a button, you can create a summary document about the investor, and it's very helpful when you're going and meeting with them. And again, when I cover the next aspect, which is building the trust, we'll touch upon this in more detail. But this is at least preparing you for all the information that you have about the investor and giving you kind of a summary in a couple of pages that you can take with you. So you can kind of do all of that, and here's an example of the summary. Right? So I'm meeting with Calstus. I can quickly generate an investment profile. It will show me all the information, and I can pick and choose, right? So I have some background about the people. I know they're an existing investor. I can see where they have invested. If I'm already pitching my funds or new products to them, I know what the status is. Again, some background about them, and then the last few conversations. Right? I don't need to kind of learn about the last 5 years of meetings and emails that we've had, but just the last few touch points, which helps me brush up on what's going on, but also kind of helps me to know kind of their next steps. For example, next week we have a meeting with them. So something like this is extremely helpful in being able to kind of plan and make sure that the meetings are happening in a right way. We talked about influencers, right? So what kind of other information? So there may be other consultants, advisors. You have the ability to now track all of that in here. A common point that comes across, and we hear quite a bit, is it's great to have this profile, but it's so difficult to update the profile, so difficult to update the notes. And again, our feedback is it's not as difficult as you think it is. All of this is available on mobile devices, so you can update this information from mobile. There's integration with Outlook. Very easy to just write an email and also have it automatically show up in our system. And all of these things are more around your understanding of the investor. Right? So it's about data, it's about information, it's about intelligence that you're gathering so that you have a better understanding about your investor. Now, if I go back to the slides here, that's kind of just the first step, though. If your goal is to get to the middle here, that's just the first step. Right? What you really want to build is trust, which is the next level of relationship management. And in terms of trust, there are kind of two key themes that I'll be highlighting. One is kind of you build trust by showing to the investor that you care about them, and I'll point out what I mean by that. I mean, it's about you have this information, but you are you showing them the right investment opportunities where they would like to invest in? It could be your funds. Are you kind of is the fund appropriate for the investor? Okay. It could be a co-investment. If you're a private equity firm, for example, you have a portfolio company, and if you feel it's a great fit for a certain investor, are you talking to them about those things, right? So that kind of indicates that you really care about them. And the second is transparency, right? And part of the transparency is being able to highlight kind of your internal processes. So share information about kind of how do you make your investments, what's the process around that. Feel free to kind of share information about the technology, and feel free to use that as almost like a marketing tool as you're talking to your investors. Again, I'll kind of point out a few things in here, but these are kind of transparency and showing that you care about the investor go a long way in building the trust. And let's take a few examples here. So one first was kind of the right investments. So let's say you have a product, you have a fund, and again, I'll take an example. You want to make sure that whichever investor you're talking to about this particular fund, it actually is in their investment criteria. You don't want to kind of talk to someone about a specific strategy if they do not invest in that. Right? Now, all that intelligence that you had built about the investor, right? So going back to all this information that we had built and classified about the investor, here's the time to now use it to build your trust. Right? So if you have a fund, for example, you could go in there, you could say, well, let me identify all the investors. So let's say this is a fund that's a debt-focused fund. You can now intelligently go through your investor profiles, and you can now say, okay, show me all the investors who would want to invest in a fund like this. Right? And those will be kind of investors who have indicated that they want to, let's say, do bridge funds, and they want to do mezzanine and distressed debt, so kind of your own classifications here. And this can now allow you to search through your investor intelligence and identify the right investors that you want to reach out to. Right? So these are all investors that meet this criteria, and let's make a point to reach out to these. There may be more investors beyond these, right? So this may be kind of one of several products that you have. You may also want to reach out to investors who had invested in previous products, right? So you can also go in there, and now here you're using your intelligence around what they had done for previous products. So I can go in there and I can say, show me anyone that we've done fundraising with who never did not decline, for example. So I can now go in there, I can do that search, and again, I'll get a whole list of investors. These are my existing investors who already invested with me. So I can now start reaching out to these investors too. So obviously, from your perspective, this is a much more efficient process because, like you see, you can now build lists and identify your target investors within minutes. But that's not the main point here. The main point is from an investor perspective, when you reach out to these investors, you should be reaching out to them with products that make sense for them. Right? Going back to Amanda's point about kind of caring about the investor. This is kind of how you are identifying and using your data and your intelligence to indicate kind of the right investors to reach out to. Similarly, kind of we talked about re-ups. Don't lose focus on re-ups. As you're managing kind of your fundraising processes, you can have kind of metrics associated with those to track kind of what's your fundraising pipeline, how much investments you're expecting to get. But don't lose focus on this. These are existing investors that I'm reaching out to for new investments. All my re-ups, and you can see a mix of how many are existing versus how many are new. You'll always be obviously wanting to find new investors, but re-ups are a critical part of that, and kind of having metrics like this puts a focus back on that and make sure that kind of you're addressing your existing investors and not losing focus there. Use technology, right? So we talked about opening up your internal processes. A funny kind of discussion that we had with an investor. So they were talking about with actually a customer. They were talking about how today it's very important to security is very important, right? You want to make sure that all the information that you have internally is secure. The investors are always concerned about how you're managing their data, where you're keeping all their information. So the gentleman was telling me about what all the things that they've put in place to convince the investor about security and making the investor comfortable about where their data is, where all their documents are, etc. And then I asked them about okay, so during fundraising, you probably have to send a PPM to them. So how do you do that? And they said, well, we just email it to them. And there itself lies the irony, right? So you, on one side, you're trying to kind of tick and check all the right boxes, but the day-to-day behavior is still hasn't changed, right? So a document that's confidential, that's specific to an investor, you should never be sending out as an email. Now, every touch point that you're having matters. So kind of things like these, without you knowing about it, the investors kind of obviously it's creating the wrong impression with the investor. So a great thing in here is to kind of set up watermarking. A lot of our customers tend to use. We have the investor portal through which they'll share the documents with these investors. And even kind of during fundraising, it doesn't have to be kind of the traditional thinking. It's only kind of investor reporting documents. No, it's also kind of any documents that you're sharing with them during the investment process. So you can kind of watermark all your documents, and then for any fund, share them securely. Use the workspaces, use the data rooms to share these documents. And obviously there are a couple of benefits. One is the ability to share securely any document with the investor. So here, if I have a PPM, all I have to do is drag and drop it here, and the investor gets access. From the investor perspective, obviously, it makes them more comfortable with your process. And for you, it's not just this. You also get metrics. You can see kind of anytime the investor looks at this document, you'll get metrics, and you'll be able to see when and which person has actually seen this document. So use your technology and use it to your advantage, not just to improve internal efficiency, but also to kind of manage your investor and kind of make them comfortable with your process. Similarly, kind of your investment process. Feel free to share information about how you make your investments. If you're a hedge fund, kind of long short, kind of how do you decide which kind of what should be the investment strategy? How do you pick the investments? If you're a private equity company, share information about your pipeline. Obviously, you don't need to share any confidential details. Feel free to kind of generate a quick pipeline report. Share it with these investors, and you can hide any confidential details from this report. again, the concept there is you're being more transparent. You're showing them what kind of how your process works. You're showing them output from your system. So kind of you're not spending hours and hours and kind of creating a presentation for the investor, and you're leveraging what you already are using on a day-to-day basis to be able to generate and create like a presentation ready material. So if your pipeline, you can kind of share information about your pipeline with these investors. Okay, going back to kind of the slide. So second point was around trust, and then the last one, which is obviously the main objective. Long-term investors. How do you get to these long-term investors? Now, the previous steps go a long way. Unless you build trust, you will not have long-term relationships. But here is really around where you want to institutionalize how you reach out and how you communicate with your investors. It's great to want to have meetings, but there should be some process behind that. And to do that, it's not just institutionalizing the process, but also monitoring that process, kind of developing certain metrics around that. And again, if I go back to our system, you can set up your own criteria. For example, many of our customers, they've segmented their investors. They say for investors who have invested over a certain amount, maybe their top 20% of their investors, they want to make sure that there is at least one touch point that you have every quarter. And for maybe the second tier investor, at least one meaningful touch point every 6 months. So you can define your processes. You can monitor them by setting up the right metrics. And let me show you some examples of that. So you'll see kind of always important to know who your top investors are. Right? So you always need to know that. So it should be a top of a list somewhere that you should have easy access to. Manage kind of how you're reaching out, how across all the different people within your team, how are you reaching out? Which investors have you been talking to the most? But from a metrics perspective, always make sure that you have some exception metrics like these. So for example, this is now flagging and indicating that, hey, these are some of my top investors, and I've had no communication with them in 3 months. So having metrics like these also go a long way in helping you set up and manage a process. And obviously, this is just one aspect of it, which is the process perspective. The second aspect is to have the right content and making sure that the meetings that you're having are investor focused, right? You're talking about them and their needs, and you're talking about kind of how your product or what you have in the pipeline, how they're going to kind of meet the needs of the investors, which is the content of what these interactions should be. So I thought that kind of was a quick overview in terms of how the Navitar tool could kind of relate to some of the points that were coming out of this survey. I'll hand it back to Amanda next for kind of further deeper dive into her analysis.
Thanks so much, Ketan. That's terrific. So here we've got a little more detail. We actually, in addition to looking at the investment data, this was our first research project talking to institutional investors. That's something we now do on an ongoing basis via our Institutional Investors Edge platform that Jarvis mentioned earlier, and I'll tell you more about that in a minute. But this was the first research we did, and so we did a representative cross-section of the entire North American institutional market. We talked to investors representing about $429 billion of capital, and one of the questions we asked was, what are the top factors driving your decision to hire an asset manager? We gave them over 12 different factors, and these were the top 5. One of the first things you may notice is that investment performance is nowhere in this top 5. The good news is that each of you on this call have 100% control over all 5 of these factors. And as I had mentioned earlier, the top factor is understanding the firm's investment process. You see understanding again in risk management. So it's all about understanding and perceiving you as a trustworthy, credible entity in which to place their funds. And on the bottom of this page, you can see it's one way of quantifying the value of investing in a robust investor education and investor relations program. So this is from the same survey. Highly trusted asset managers hired about 6 months more quickly than the typical asset manager. So that's really money in your pocket. So just to wrap up on Chestnut, we're a consulting firm. You can see on this page what we do. Just want to mention that Institutional Investors Edge, which is our support platform for sales and marketing folks at asset managers, actually publishes research on a regular basis, and we do webinars every quarter. Our next webinar happens to be tomorrow. We're going to be sharing research that we just conducted on how do asset managers and how should asset managers share information when a portfolio manager is leaving the firm, and also on where there are pockets of interest and how to further develop those pockets of interest in socially responsible investing. And if you're interested in that webinar, you can go straight to the Institutional Investors Edge website to register yourself. That's institutionalinvestorsedge.com. Chestnut, you can see we ask the right questions because all of our senior advisors actually have capital markets experience. So in addition to extensive institutional investor backgrounds, we understand how the portfolios that you're marketing are actually built, and we're able to work directly with portfolio managers and help translate what's in their heads and what isn't always very articulate into a message that will resonate with investors. And we focus on what matters, which, as you heard me say earlier, is really what institutional investors are interested in. And for most of our clients, we end up working as the third arm of their sales and marketing team over time. So thank you for your time and attention. And with that, I'm now going to hand it over to Alan at Navitar to wrap it up.
Thanks, Amanda. We're going to answer questions in a moment, so please go to the webinar panel, probably on the right side of your screen, and enter your questions. And in just a moment, we'll go through your questions. We've heard a lot of information today about what leading capital raisers do. Keaton showed you some examples of how you can turn the strategy into action with Navitar's Connected Growth Platform. And for a quick minute, just before we take your questions, let's talk about the platform. Looking at the graphic on the screen, the platform is an intuitive IR solution built on the best technologies, Salesforce and Box. Your IR strategy is embedded in the technology. It's driven by the processes, another word you'll see on the graphic, and the processes are embedded and included in the growth platform that we customize for you. And for the next item, investor intelligence, we load the third-party databases that you buy, like Preqin, so that you can leverage those databases to reach out to potential investors. We also load your historical information about your interactions with investors and consultants, along with the relevant financial information. And we show you how to easily capture your investor interactions from emails, calls, events, and appointments going forward. Also included are the metrics that Keaton talked about just a moment ago. The dashboards and reports are there so you can easily track your progress and the results. And finally, it includes an investor portal. It's all connected, where you can securely and confidentially share your information. So there you have it, the Navitar Connected Growth Platform. So we are getting a lot of questions. Amanda, are you ready for the first question?
Sure. Hit me.
Okay. All right, I will. This is a good one from Sarah. What are the 2 biggest mistakes that you've seen IR teams make?
Well, the first is focus on performance, to lead with performance, to make the whole message about that. You've really lost them before you've even started when you do that. And the second is not to even listen, not to even ask, not to make anything interactive about any conversation with an asset manager. So those are the top two, I would say.
Okay. Caton, we're asked if we set up a process and it's based on some new research that Amanda's group comes out with, we decide we better make a change. Is that possible in the system? And do we pay a lot extra to make those changes?
Within the Navitar system, no, it's all included. It's possible to obviously we've kept it flexible and realistic, right? So we recognize that processes change for many good reasons. So anytime you want to change processes, you will be able to do that. You don't have to pay every time if you want to change your process.
Okay. Amanda, can you give us an example? This is a question from Alex of a hedge fund that Chestnut has worked with in the past and that you've helped with their investor education.
Sure. So we worked with a hedge fund last year. They're a fund of funds, and they really were having a hard time, and we see this a lot, growing beyond the friends and family stage. And they had a product with a fantastic pedigree. Of course, they had a terrific track record. Nobody was caring about their track record. It really was very suited for family offices, but they were having a hard time getting in. And in working with them, we saw it wasn't just the materials, but really their whole message. What was lacking was explaining to their target market, first of all, that's still a market that's pretty underpenetrated in hedge funds on the lower end. They had a pretty low minimum and accessibility to a great portfolio of hedge funds. So, but investors didn't understand what the role of hedge funds were and why a fund of funds was a good way to get in. So we completely rejiggered their message and made it much more about diversification of a portfolio and then their own diversification and how it was a way for a high net worth investor to get in to about 30 different funds they could never get into otherwise. And then we worked on training them in telling the story and then training retail FAs, actually writing scripts for them, going out, and they're getting very good traction now and are on a nice growth trajectory. So hopefully that's a helpful example for you.
Okay. Frederick is impressed with the research that you've done, and he asked at a high level just one or two quick points about how this data was collected.
Sure. So the performance data came from eVestment, and we looked at 4 different categories: 2 equity and 2 fixed income, both domestic and global, over an 8-year period. So it was a lot of good data, and it was over 931 different products, and that's how we did the analysis. We ended up using quintiles. When we were actually first doing the research, I thought we would be using correlations, and I thought if we had a correlation under 1 between performance and net capital flows, that Chestnut would be a viable business. And when we first did the analysis, the correlation came back 0.04, and I made our poor intern do it again, but that's actually what it was. We ended up going with quintiles because that was a clearer way of showing the data. And then, of course, we did the research, which now is something that we've continued to build out through Institutional Investors Edge. So we're continually interviewing via phone institutional investors. And phone is key because we know we're getting the actual CIOs there, and it's not just being forwarded. So it's pretty accurate data.
Okay, another question for you, Amanda. You say ask the right questions. Tom wants to know, can you give us a couple of examples of what the right questions would be, the top two that you would want to ask?
Well, when we say ask the right questions, we're asking the questions of our clients, and it's usually, do you know what portfolio issues do you solve for your clients? And that usually gets us a long pause. If you're actually an asset manager in front of an investor, that's what you should start with, is what are you most worried about? And what are you least worried about? That latter one, it's interesting, that was one of the pieces of research we did for Institutional Investors Edge a couple months ago. And on our webinar, in fact, and in our report, we called out that the item that institutional investors were least worried about last fall was interest rates. And we pointed out that whatever people are least worried about almost always comes out to bite them. So we recommended that any asset managers who had any research that was helpful on interest rates, now would be the time to publish it, because pretty soon people are going to get bit, and then you can establish yourself as a thought leader. And sure enough, rates have been killer over the last several months, and it's moved up on investors' worry list quite a bit. So hopefully that's a helpful answer to the question.
Right. We have a question for Ketan. How long does it typically take to get an IR platform up and running?
Oh, that's, our platform is already set up. Obviously, we need to get your data in there and your processes. So usually just a couple of weeks would be the typical implementation.
All right. So we're coming up on the top of the hour, so we're probably going to cut this off now, and I apologize that we didn't get to all of your questions. But if you do have questions that you are dying to get answered and you'd like to have a quick conversation with us, please feel free to reach out. Reach out to me, Alan Siegert, at Navitar Group. I'll give you the number. You can reach us at 212-863-9655, extension 7434. I want to thank you all for attending today. We had an outstanding turnout. I want to thank Amanda Tepper, the CEO of Chestnut Advisory Group, who, by the way, is based in Westport, Connecticut, also the location of a Showtime series right now about the hedge fund industry, interestingly enough. I want to thank Jarvis Cromwell, Navatar's marketing guru, and the COO of Navitar, Ketan Kankar. I'm Alan Siegert, and thank you all for attending today. We look forward to talking to you in the future.